Good morning, good afternoon, or good evening, depending where you are on this wonderful planet. And welcome to the Tuesday, the 25th of June, Bull versus Bear webinar. Steve Miley here on the Call for Trader. Welcome, everyone. Welcome to and hello and good morning to or good afternoon from me to Jim, Stephanie, David. Thanks for your good morning, guys. Always nice to get a good morning or good afternoon. So welcome to everyone on the call today. Going to go for our usual regular run through in this day. It's going to be fairly brief. There's not a lot to talk about. As we pointed out in yesterday's webinar, when we looked at the shape of the week, it's a fairly quiet start to the week on the data front. So not really too much to focus on the data side. The fundamentals really not really too much. And I thought we could see more of a consolidation day yesterday. Obviously, far more of a negative day yesterday that we saw. So it's going to be interesting to see how it shapes up. Already this morning it's like shaping up a little bit like we might get a bit of a rebound. Yesterday was really all about Nvidia continuing its sell-off that we saw from the end of last week. A significant impact from Nvidia yesterday when it was down about over 6.5%. Nvidia, so it's had a big slide since the end of last week, about 10%. It's like $500 million or something. And that's pulled the rest of the market down a little bit in here. And interestingly, the Dow actually making, I think, a record high close or a month high close. So that shows you the broadening of the rally in here. So as tech has gone lower, the old cap stocks, if you really want, the old large cap stocks in here have done slightly better on this sell-off in here. So we've maybe seen a slight broadening of the rally as the Dow was hung in a little bit, while the obviously elsewhere we've seen significant losses on the Nasdaq as well as Nvidia went lower. And I'm probably looking for a rebound in here today. It hasn't been technically that damaging for the Nasdaq and for the S&P. I think we're still looking for the rebound. And interestingly, as I pointed out yesterday, bonds are pushing back to the upside in price to lower yields. And if we get a breakout into higher prices, lower yields on bonds, that could see benefit equities and stock indices, and in particularly Nasdaq, because lower yields, lower interest rates are better for growth stocks, tech stocks, Nasdaq. So if we look at five things, first of all, starting off with the calendar. Bowman's been on the wires in here, or is about to be on the wires, or is on the wires. Sorry, Bowman, but not speaking at the moment. But I haven't seen any headlines from there yet. We get Canadian CPI. Slightly interesting, keeping an eye on it just to give us a feel of where global inflation is going. Might have a very slight impact onto US markets in here. But other than that, it's fairly quiet in here. CB consumer confidence. I might have missed that off the calendar yesterday, actually. I may have missed that off that calendar. The consumer confidence day at 10 o'clock Eastern is going to be the main focus. Bowman speaking again at 2:15 Eastern time again today. So it's a fairly light calendar. The main focus really going to be on that consumer confidence data out of the US that we get in here later today, US time. Let's look at five things you need to start your day. America's version in here. So Nvidia, obviously we've spoken about that. Free day, $430 billion. Did I say $500 billion? I meant $500 billion. $430 billion sell-off in here for Nvidia. Stock market's fallen 13 cents. Briefly overtaking Microsoft last week as the world's most valuable company in here. For me, rabbit guidance investors turning to technical analysis for clues to when the bottom may be. I think the bottom's about to go in. I've got long-term long in Nvidia for some time. I'm an owner of Nvidia, and I'm going to use this dip to buy. And I think we may be seeing the turn any minute now. So I'm going to be looking to buy on longer-term investment. So I think the bottom could be going in Nvidia. Could see the turn today. And if you see the turn today and it rebounds, we get the value buyers stepping in 13% down, then we could easily see a significant rebound in the major indices. So you're certainly keeping your eye on Nvidia as well as elsewhere on those bond markets. Bitcoin as well in here is seeing a significant move. So looking for the largest digital asset posted one of its steepest drops yesterday. And so negatives there as well. As goes to like a mini risk off face. Airbus slumps in here, has pulled down the aerospace stocks in here in Europe this morning, down more than 10% after issuing a profit warning. Daily yesterday was the labour market's nearing an inflection point. Because further slowing could mean higher unemployment. So that's a signal that potentially we could see. The fact that if we do see this inflection point in the labour market, we are seeing some little signs of that. The economies and the labour market stay generally strong, but if we do see an inflection point, a slight worsening in the labour market, a slight weakening of the labour market, then that could be cause for the Fed to become more dovish quicker. Bowman, more official day. Bowman we've already spoken about. Cook is also scheduled apparently, but we don't see where that is. The first round of French elections are coming up later this week. Okay, so we're keeping an eye on that. Showing Marine Le Pen's far right national widening its lead. So that could cause some turmoil going into the end of this week, next week for riskier assets, including stocks. So US futures are pointing to a rebound after the Nvidia pulled us lower. Investors have been rebalancing and moved into value stocks. That's what we're talking about there. A rotation into value stocks, out of growth stocks, mostly tech, into value stocks. Hence, the Dow Jones Industrial Average is outperforming. Nasdaq's futures rebounding as Nvidia stabilizes after AI stock rout. Nvidia's $500 billion hiccup in here. It's not $500 billion, $500 billion hiccup. Bitcoin and China also down on the overnight. So we go into that. We've been in this risk-off mode. European shares down, as I mentioned, on Airbus in here, and also getting pulled down in the wake of Nvidia on the overnight. European stocks fall. Nvidia slumps, hits the tech sector, but Dow closes at a 1 month high, as I said in here. Investors broaden portfolios. So we've seen a rotation into, as we said, value stocks, into old era versus new era. Although a lot of the Dow these days is more new, it's got a lot of new era stocks in it as well. Elsewhere, Asian markets in here, we saw actually Hang Seng was up 0.25% in here, and the Nikkei up 1% on the overnights. European markets down, playing catch up on the downside to the overnight. So we saw the losses in the US. FTSE's only down 0.2, but the DAX and the German DAX down 4%, and the French CAC 0.8 this morning. And Airbus obviously not helping there. But if we look on the overnights in here, we are back up. We've bounced 0.5% on the Nasdaq already, and 0.2 up on the S&P 500. Let's take a quick look on the bond markets and the rates markets in here. So this is not really hugely changed in here since we've last looked, last week. The CME FedWatch tool, very, very stable now. We've got basically, if we look out to September when the potential first rate cut is, basically it's 2/3, 1/3 towards a cut. Okay, just roughly. And if we go to the end of the year in here, no cut is one cut is sitting about 30% in here. The market's still 2/3 now thinking we're going to be having 2 cuts in here. So about 30%, just over 30%, and just under 70% in here for a second rate cut or more by the end of the year. So those numbers are not really changing too much. I think this is more interesting in here. You see this lower yield move, moving back towards the end of this 1.5 week range we've been in. We mark this as between really, I think ultimately it needs to get back up here 433 in here on yield. But really the first trigger 430 on yields. But for me, the risk is we go to lower yields in here, and the breakout points at 421 and 419. Down through 421, 419 would be potential significant. This is like a flag pattern, right? So you've got these you had downtrend, then correction, then accelerated move, big 50% correction of that move there we saw, and then new downtrend. If this is a flag on this downtrend, then we can see significantly lower yields going forward, lower yields, higher prices. And just take a look in here at the same thing. You've got it across the duration as well, 30-year, 10-year, 5-year, 2-year, all in consolidation mode in here, and pointing back to higher prices here, particularly this morning on the 10-year, and just using the table here for the breakout points. I said yesterday, really we've got 111.01 and 110.02 as the short-term levels in here. 111.13, the more important level on the upside. So 111.01 and 111.13. If we break up through those in price on the September 10-year note, I think it is important to watch out for that for a potential move back higher in stocks. I think this is a big buy opportunity. If you're a longer-term investor, if you've been waiting to buy Nvidia and you got a 13% dip, that's when you're going to come in. So I think we could see a significant buy into the dip in here going into today. Remember that consumer confidence data we've got coming up, and we can just looking for potential break there. It's remaining bullish in here. We did get the sell off, but then a little bounce in here, bearish inside day, but bullish risk intact in here. If you go and take a look at both the reports in here, significant fallback, but for me, we're still looking for the turn back higher, and we've already got that on the overnights in here. And here's the 10-year. You can see pushing back up. If we get break above, the resistance levels were flagged in here, 111. 111.02 and then 111.13 up here, 111.02 here, 111.01 actually. We could see a significant break to the upside. Bullish in price, lower yields, and bullish for stocks as well. And if we just take a look at the stock indices in here, is the Nasdaq on the 30-minute. So look at the first. We'll go to so significant sell-off on Thursday, and then again Monday. Look, we broke that 13-period EMA, but rebounding back above it now. And on the ES in here, we've gone down close to it and rebounding already. For me, it's all about a rebound today. I really do think there's going to be a notable rebound. Here's the 30-minute charts in here. So we've had these significant sell-offs, mostly driven by Nvidia. There's Friday. There's yesterday, and look, we've got a double bottom already formed in here. Double bottom on the ES on the overnight. Okay, I've already taken out that peak, so I've got double bottom pointing higher. It can easily be back up to yesterday's highs in here, I think. And on the Nasdaq, not dissimilar. In here, double bottom goes in on the Nasdaq through here, and then potential you measure on the double bottom takes you at least up to like 119,900 or above. And potentially going back up towards 19, almost up to maybe even 20,000 today. It's all looking quite bullish for me. I think this is we've had the rout, we've had the shakeout, we've had the fears around the overpriced Nvidia shakeout, 13% down. And then we're seeing a turning already, and I think we could see markets see a significant rebound today. That's just my view. Maybe I'm talking my own book, but that's my view. Okay, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. I'll be back with you with another bull versus bear webinar on Wednesday.